In today's video, we're going to be doing a review on our Yieldmax funds. Which are we buying after the recent tech decline, okay? Some have pulled back to attractive areas, and I want to share with you which ones I'm adding to, okay? And if you stick around to the end of the video, I'll share with you how I'm playing IEP since that stock dropped about 25% today. Okay, so we earn over $100,000 per year in dividends at this channel, and our performance value shows that we're up 47% for the year. The SP is up 19, the Nasdaq's up 36, the Dow's up only 6. So 47% for the year, and we're also up 1.2% today. Okay, 1.2, whereas the Nasdaq's up 0.85. We're also beating the other indexes. So we're beating the market on both a year-to-date basis and a daily basis. And we're going to go into the portfolio and see where that's coming from. It's most likely coming from Cornerstone, and what do you know, up 1.8 and 1.97. Okay, so we're up almost $10,000 roughly in Cornerstone today. And we're still up even $8,500 after even the IEP decline. Okay, IEP is down 25% today. Again, I'll share with you what I'm doing with this fund at the end of the video. Okay, so going on down the line. Okay, first of all, if you need help living financially free out of your brokerage account like me, email me for my e-guides at akintodd48@gmail.com. I use a little bit of margin to get that extra income that you saw, that over $100,000 per year in dividends, plus the performance that I'm getting. I use margin, okay, for every $1 you put in your account, you get $4 of purchasing power, okay, and I just use a small amount of that margin, okay, a fraction, a responsible amount to get extra income and performance. This margin here, this 200,000 in margin debt, and this number right here is, I believe, a responsible number, and I tie it to the indexes, and so that's why it's to me such a viable strategy, because not only is the interest charge on my margin low, so the interest is like 4 or 5. In my case, it's about almost 6% now because they keep raising rates. My margin rates, it's around 6%, but that's still lower interest than credit cards and a mortgage, and in many cases, and the yield that I'm receiving on these funds, especially Yieldmax funds, where you're getting, excess of 50% dividends, 50% dividend yields, it more than covers my margin interest. So as long as I'm tying my margin to the indexes, which the Yieldmax funds comprise a large part of, then I'm going to be safe from huge market declines because I'm tied to the indexes and not specific sectors. If I had all of my money in IEP today, I'd be really hurting, and I could be, risking margin call, risking a margin call, 23%, right? I could be down if I had my whole account in that. Okay, but I instead tie my whole account to the indexes. Okay, so if you need help, again, doing what I do, email me for my e-guides at akintodd48@gmail.com. I have e-guides on how to play Cornerstone, which is where I have 500,000 in my account, and that's where I anchor my entire portfolio. It is the index, Cornerstone, CRF, Okay, I have e-guides on Cornerstone, how to play it properly. See, it's a 5-star fund, okay, and it beat the S&P over the last 10 years. I have e-guides on how to play Cornerstone. You have to time this fund properly around its rights offerings, okay? And so you have to sell when the rights offering is announced, and that's what I alert you of here in this Discord chat room where we're over 200 members strong. I have a Cornerstone RO section here, and then we have that's where we alert of the Cornerstone rights offering. We also have other sections, Yieldmax funds, which I'll be posting this video on today, our Yieldmax section. We have many other channels that you can explore at your leisure, including who does the drip for Cornerstone, my daily portfolio recap where I post my trades at the end of the day, etc., etc. So, and by the way, I've been posting my updates there recently, as there hasn't been much to make a video on in YouTube with. So, that's where I'll be, spending most of my time is on Discord. Again, 8,500 we're up today, just trying to catch my order in the portfolio as we get back into the portfolio. A lot of it's due to Cornerstone, okay? And then we scroll on down, OARK, down 1%, okay? It was down 1% earlier today, so I added 1,000 to it because our core position is 30 in OARK. It represents the Russell. So it's a big part of our portfolio because you have to have hyper growth in there to offset a lot of that NAV erosion and decay that you see in high yielding dividend funds. Okay. OARK, see, it had a pullback here. Now it has a 50% dividend. Okay. Quickly going into ARKK, you'll see that it's pulled back to the 50-day moving average. Okay. ARKK. This is what OARK follows, and this is all that matters. Okay. ARKK kind of represents the Russell 2000. So it's cheap on a max time frame, by the way, ARKK, and on a 1 year time frame, you'll see that it's at the 50-day moving average, this purple line. Okay, that's the all-important moving average. If we get another dip to the 200, that orange or near 40, I'll be buying hand over fist. Okay, this is a 50-day moving average. This is the purple line. Okay, for OARK. All right. So, and that's for ARKK, which OARK follows. So I bought 1,000 of OARK, okay? And then also going down the line, I remember TSLY, if you saw that was right below. So we need to follow TSLY to see what to do with TSLY. And as you can see, we're here at the 50-day moving average, this purple line, once again, and a whole number of 250, okay? 250 plus a whole number, okay? 50-day moving average, okay? 250 plus we had a pullback on the RSI. Okay, so TSLY, since Tesla pulled back to the 50-day moving average, I added 1,000 to TSLY. Now I know that I'm a little overweight in the position now, but I'm basically equal weight, because if 10,000 is my core position, and look, we're up 700 in profit, so being up 10,700, we're back to exactly equal weight in TSLY. Okay, because we took profits earlier after the earnings announcement. You know, we took profits around that period, and then now we're reloading near the lows. So, but Tesla, you have to learn how to manage its maintenance, okay? When you go and you buy Tesla, which I just X'd out of here, when you buy TSLY, okay, you have to watch this number here. So 214,000 available withdrawal, okay, 214. This market value number is meaningless. 214 is what matters. Well, if you go to a chart of, if you go to the maintenance tab of TSLY, okay, look at the snapshot, okay, on the buy order screen. You see 64% dividend, but look at this view margin maintenance requirement, 50%. 50%. That is the secret to this channel, okay? The whole secret to this channel is maintenance. That's why I like Cornerstone, okay? We look at Cornerstone here. Look at its maintenance, okay? CLM, you'll see that it's 30% maintenance, okay? 17% dividend, which is very nice, but also 30% maintenance. So that means for every 100,000 I put in Cornerstone, only 30,000 of my equity is taken up, okay? So that's how I'm able to put hundreds of thousands in margin, okay? And not even budge this available withdrawal number, okay? This available withdrawal number is the whole key to living out of margin, okay? If this number gets to zero, you're in a margin call. So I can already withstand, I've done the math for you many times, over a 30% correction in my account and still be at, still have enough cushion for available withdrawal. Okay, I won't be in a margin call. If the market crash comes over the course of a year, then our 20% in dividends that we receive from Cornerstone and everything else, our yield's probably higher than that now, probably more like 30%, our overall yield, maybe 25% on the account. I haven't checked recently since we've been adding to the Yieldmax funds. But our overall yield there would offset any market decline. So if there's a 20% market correction, for example, we'll break even since the dividend in Cornerstone is 20% roughly. So I'm not worried about a market decline over the course of a year. This number won't change, therefore. And I can continue to live financially free out of my E-Trade account. All my bills are tied to this. I have an E-Trade credit card and checking card. I swipe and go wherever I want in the world. I buy food with it, cars, clothes. You can do anything with it, even though you're in debt, okay? So, and then this debt also will be paid back in less than 2 years with my over 100,000 per year in dividends. And my account will grow to 700,000 and my debt will be zero. And I'll be left with all these dividend paying assets to myself, paying monthly cash flow for life. I'm sorry to repeat myself, but for all newcomers here, monthly cash flow and dividends provides qualifying income to banks for loans. And that's how I really level up my account. Okay. And then my dividends pay back the loans as well. So dividends are the key to living financially free in life, guys. But you have to know the maintenance of TSLY. If you have an E-Trade account, other brokerages have it at 100% maintenance, Yieldmax funds. Some brokerages have it at 25%. Like I've heard Robinhood, I think, has TSLY at 25%. Not sure. So keep that in mind. That's the secret to my success at my channel, okay, is maintenance and available withdrawal. I keep that number high at all times. If we have a 30% correction in 1 month, a black swan event, guess what? I have put options that shield me from that, and I made a video on that, which not many people saw, but that's okay. These put options will shield me from a decline. Yeah, it's a small amount, only $100, but if we get a 30% decline in a month, those will go crazy because they're monthly puts. And I will make more money than I lost in my account. I'm pretty sure. So options are always a little tricky, but if I can, be available when that 30% crash comes, I will clean up on the options and really offset all this volatility in my account. Okay, so moving on down the line, I also bought GOOY and AMZY. Okay, I bought GOOY, even though AMZY's up big today. I bought GOOY because it's cheap on the chart. Okay, let's just go look at a chart really fast with these two so I don't take up too much of your time. Okay, GOOY would be GOOG because we're following GOOG. Okay, so GOOG right here, pull back to the to that 10-day moving average, not bad. I had a little dip from the highs, but look, it's way off of its highs, and that's why I like Google. Okay, it's still, to me, a value play almost. Okay, it was around 150, and now it's at 130. So I've added to GOOY through, I've added to Google through GOOY, and then Amazon I also believe is cheap. Okay, yes, it's up huge today. All right, yes, I get that. It's up 11%. I added earlier this morning, so I'm actually doing well there. But look, we had a breakout today. I've been calling for a move up in Amazon because it's still cheap. Yes, it's up from the lows big, but everything is up big from the lows. This one is still off from the highs, so that's a value play to me. 175. So AMZY and GOOY, okay, I bought more of today because those are value plays. Now NVDY, okay, I'll just show you real fast why I'm not buying NVDY. It's the same as Meta. Okay, I'm not going to show you Meta because it's similar to NVIDIA in that we've had a huge run up. Okay, we're at all-time highs in NVIDIA, but where it's similar to Meta is just in the fact that it hasn't pulled back enough from the highs yet for me to get interested. I need a tag of that 50-day moving average, that purple line, for me to at least get interested, which that's what TSLY did. Tesla did. That's what ARKK did. APLY also broke below that 50-day moving average today. I don't know if I showed you that chart, but it did. If you go look at a chart of APLY, we tagged that 50-day moving average. So I added a little bit to APLY, and I did that with the proceeds from selling some IEP. Okay, IEP, it's recovering fast. Okay, I'm glad I didn't sell too much of it because I only sold about 1,000, maybe 1,500 of IEP. I sold what I was up in IEP and what I was down in fractionally for about a $97 loss. So that's peanuts to me. A $4,000 move in my account up or down is a 1% percentage performance change in my account. So that's what I did with the Yieldmax funds today, guys. I bought TSLY, GOOY, I bought more AMZY, even though it's up big, because today it's still a value play, even though it's up big today. I don't know. I also bought OARK, okay, because ARKK tagged the 50. And hopefully that'll add to our performance as these funds move up higher. And if tech continues its recent decline, then I'm going to just add on any dip to those Yieldmax funds because they are the index and they have such nice yields. You just keep in mind that they have high maintenance. And again, if you need help with maintenance, email me for my margin e-guide at akintodd48@gmail.com. So this is their performance, guys. Our estimated income is also going to rise after we, get these dividends set from AMZY and GOOY after those register. So that'll be nice. So I hope you enjoyed the video then. Okay, I'm going to end it there. Click like or subscribe if you haven't already, please. And if you have questions on how I play my account, how I either use margin to live financially free or how to play Cornerstone, okay, email me for my e-guides at akintodd48@gmail.com. where you also get my phone number and you get access to Discord, where again we're over 200 strong, and I feel like nothing can stop me with Cornerstone, because the only thing standing in the way between us and financial freedom to me is Cornerstone, the rights offering. And once that, if we're all on top of that rights offering, then we're going to continue to make that, high yield per month. And it's going to help us live financially free out of our accounts uninterrupted, so it's really all, it all hinges on the rights offering for Cornerstone. And as long as we keep talking to each other, staying in communication with one another, and keep working as a team there, I think that nothing can stop us. Okay, so again, hope you liked the video, guys. Talk to you soon.